Retail banks are well positioned to derive significant value from Gen AI and agentic AI. Rich data repository, widespread digitization, and a customer base already accustomed to AI native experiences in retail, travel, and digital media mean the condition for transformation are largely in place. Yet, for many institutions, at scale value remains elusive. AI investments have delivered results in pockets, improving isolated processes or accelerating a specific decision, but without fundamentally changing how the bank operates. In contrast, AI first banks are taking a more strategic approach by prioritizing three or four business functions for end to end transformation. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dayalani. Over the past 2 decades, banks have been investing in digital and cloud transformation and are already modernizing their IT landscapes. This has led them to become data rich and digitally automated. Now, with the advancements of AI and generative AI, banks can build on this digital data and cloud foundation to weave in AI capabilities across the value chain and go AI first. Let's welcome Ranga Reddy, co founder and CEO of Maveric Systems, to explore how banks can transition from digital first to AI first while ensuring scalability and business value. Hi, Ranga. A very warm welcome to our podcast today.
Thank you, and nice talking to you. How do you want to take the discussion forward?
Yes, Ranga, and it's a pleasure to have you on our podcast today, and we are excited gain some first-hand experiences and insights from you in terms of the entire conversation that we'll be having, which is around AI first banking. But before that, let's tell our listeners more about Maverick Systems, its specialization. And alongside that, a little bit more about you, Ranga. How has your journey been till date? And how do you approach your role at Maverick Systems today?
Yep. See, Maverick Systems has been in operations for the last 25 years. We started Maverick with a single objective of focusing on a banking and financial services vertical. And over the last 25 years, we held our decision just to be a single vertical focused firm. Apart from being singularly focused on banking, we also thought that we should actually be working largely on the change the bank, because in banking technology, you normally hear two terms, change the bank and run the bank. So we chose at the very beginning that we will play a significant role in the change the bank side. And with regard to basically change the bank means banking transformation projects. And in that transformation projects, we operate both on the business side, that is the operations of the bank and how is it that technology can impact business operations, as well as what we call as the technology side. So singularly focused on banking, prioritizing transformation, operating both on the business side and technology side have been the kind of focus that we kept over the last 25 years. And in order to keep ourselves relevant to the customer, that is the end using bank, we normally thought that we should have a kind of a competency that is layered. When I say layered, the associates who work with Maverick need to be not only strong with regard to technology, but they should be reasonably aware of the COTS products, that is, bought out products that are being used in the bank, as well as the banking domain. So, to that extent, in 2000, we started with retail banking, and it took almost 9 years for us to really master and understand domain products and technology in retail. Subsequent to that, we focused on corporate and wealth management. So over the last 25 years, we gained enormous depth with regard to retail, corporate, and wealth management. And over the last 5 years, we have also been getting ourselves abreast with the capital markets knowledge. So over the last 25 years, we've actually step by step built retail, corporate, wealth, and now we are working on capital markets. And we are a niche player That is, primarily, we focus on depth as compared to scale. And at this point of time, over the last 3 years, we've been focused a lot more with regard to applying AI at the core of our solutions rather than trying to bring in AI as a kind of a garnishing on most of the initiatives that you normally see are like they bring in AI not at the core but at the periphery. So our struggle has been over the last 3 years to bring AI at the core of the solutions that we build for our customers. Now, you asked about myself. I've primarily been a management consulting professional from the very beginning of my career. That's anywhere between 88 and 2000. I worked in various consulting roles in India. And in 2000, we thought that we have done enough of consulting wherein we advised others. We thought that we should be in a position to use our own insights and experience to build a firm. And by virtue of having similar like-minded people around me, I was able to put together a five-member team, primarily from consulting backgrounds. And over the last 25 years, five of us have been at the helm of affairs at Maverick, taking various roles based on the context. At this point of time, I play the CEO role. Primarily, I look at sales function. That's primarily the growth-oriented aspects, be it with regard to existing accounts or new accounts. Apart from that, I also handle the marketing function as well as the HR function. There, we have senior leaders. I only support them in marketing and HR functions.
Thank you for that overview, Ranga. And I think it really helps set the context for our audience
Mhm.
for today's conversation. And, talking about your organization and sharing your details about the role, it gives us a much clearer picture of the impact, the enterprise is trying to create in the market. That foundation in place, let's move our conversation forward and talk about the broader industry landscape and the trends influencing the banking industry. Now, of course, we are living in an era which is kind of being redefined by AI. And the banking and financial services sector must evolve to remain competitive.
Yeah.
And today's challenges are multifaceted, Ranga.
Mhm.
You have fierce competition from fintechs, retailers, tech giants, and even non-traditional players like healthcare and gaming companies. Legacy systems that power the bulk of global banking but stifle innovation, and the need for seamless omni-channel customer experiences amid regulatory scrutiny is defining our era in the banking. So the
Mhm.
solution lies in an agentic ecosystem that infuses AI into every layer of the bank,
Mhm.
which will empower more adaptive intelligence without replacing human oversight.
Mhm.
So, what according to you are certain characteristics that distinguishes an AI first bank from a digital first bank, and why do you think this shift is becoming increasingly important?
Okay. See, just to like at a brief level, most of the software programming has been rule-based. That is, you code a rule into the software and it follows those rules and it's in a position to deliver a certain outcome. And to a large extent, those rules are sometimes hard-coded, sometimes are configurable. But in the AI first world, basically we have an ability to get the software to observe a pattern, and based on recognizing certain patterns, it can initiate different sets of actions. So earlier, if you see, it is like a decision tree. If so, do this. If not, do something else. That is a kind of a way in which software programming or technology was being looked at. But at this point of time, it is pattern based. There's a major shift with regard to the way we look at software. Having said that, in the AI first, you have some kind of a predictive analytics is something that you've been hearing about that becomes far more easy to execute or far more reliable in execution. So if I really need to be making it a little simpler, in the beginning we had what we call as digital first, that is almost in the dot-com era that you were probably 20 years back. It evolved over a period of time, and then it's all about channels. digital first banking was all about channels. That is, how is it that you can reach customer and how can you service customer in a seamless manner by digitizing the front end systems, the middle office, as well as sometimes even the back office. Then came your cloud first or cloud computing matured. And because of that, you had certain other advantages with regard to actually not depending on in-prem, but having a combination of on-prem as well as cloud. Now, AI first is feasible primarily because there is certain degree of maturity on digital and cloud, and there is also a reasonable amount of maturity with regard to data. You're leveraging all these three things, and thus you're in a position to even think of a AI first approach to banking. So the fundamental difference, so to say, is that you are moving away from rule-based to that of pattern-based is one way of looking at a big difference.
That's a really great distinguish that I'm
Mhm.
sure our listeners would get a better understanding after listening to your response.
Mhm.
And I think for years, digital transformation was largely talking about traditional banking services online,
Mhm.
making processes faster or paperless and more accessible. But AI first banking, it represents a much deeper shift. Instead of simply digitizing the existing workflows, banks are now redesigning the entire customer journey around
Mhm.
intelligence, automation, and real-time decision making.
Yeah.
Great. With that being said, now when we talk about banking industry,
Mhm.
I mean, with so much hype around AI, every enterprise, irrespective of the industry it operates into, are very excited to deploy one any specific AI project or an initiative for a particular use case.
Yeah.
But the opportunity in small business banking or corporate banking is on another level. Whether it's credit or payments or foreign
Mhm.
exchange,
Mhm.
these banks, their services are very complex or tightly regulated.
Yeah.
And I think that's the perfect condition for AI to generate efficiency and insight.
Yeah.
But on the other hand, the adoption is inconsistent.
Mhm.
Why? Because, I mean, one hand, banks are experimenting cautiously. Nearly all have run multiple small scale projects to understand AI's feasibility and benefits.
Mhm.
But very few have scaled AI across the organization.
Mhm.
A recent EY report with MIT Technology Review Insights on agentic AI found that more than half, that is 52% of banks, had piloted the technology, but just 16% of banks have fully deployed use cases.
Mhm.
Whether they have used it, the impact has been underwhelming.
Mhm.
So, what are the biggest barriers the banking industry or banks face when
Mhm.
moving from AI pilots to enterprise-wide adoption?
Good question. See, there are various views when it actually comes to why AI is not giving. See, AI at scale is one way of looking at it. The other way of looking at it is how does all these investments around AI, ML, and automation changing a business performance parameter? So, if I come from that angle in terms of when you talk about an AI initiative, it has to be something that is driven by the desired business outcome. Like, for example, in lending, three parameters mean a lot to the business. One is cost of customer acquisition. The second thing is the speed at which you could probably acquire customers. And the third one is in terms of how do you actually service the customer. And the servicing the customer will include how are you in a position to manage delinquency. Delinquency means people who don't pay up. If these are the three parameters to impact, and then you look at what helps me in increasing my or decreasing my customer acquisition cost and the speed of customer acquisition, and then come down from there to identify a set of initiatives that may include not only technology but also business principle change, and then subsequently invest in a way that you actually impact these three critical business parameters, then you can actually say that I'm actually doing a transformative initiative that is likely to impact business in a radically different way. If you approach it in that angle, then it is not one use case that you're likely to pick up. And it is not that your reliance is only on AI. It could also lead you to look at ML. It could also lead you to look at deep learning, or it may just say that in some aspects, just simple automation is also enough. So it will be a bunch of use cases that you need to put together in order to achieve one or two key business parameters or performance indicators. If you approach it from that angle and have a medium term kind of a plan, then you can see the real impact. But most of the time, especially in the initial stages, say about 24 months to 36 months back, people were more in the learning mode. It was not that they were cracking business issues, rather, they were trying to apply the new technology, the AI, be it your agentic AI. Agentic AI was far less experimented with, say, 24 months to 36 months back. It was more on the chat GPT. So it was like another way of actually supporting a person with regard to data querying. So from that angle, the minute agentic came to be a little more in focus, and then add to that, you are actually not starting with something practical, rather, you are trying to look at what are the two top business parameters to change. If I have to change, what is the blueprint in terms of what are the various operational, technical initiatives that I need to take up? And over a period of, say, 3 to 6 months' time, how is it that I can actually make a great impact on the business performance? Then you actually get to see impact of AI in a far different light. However, if you were to do that, the first thing that you need to have is business leaders defining clear outcomes. This is the expectation kind of thing. Once that is done, there are other issues that you need to do a bit of housekeeping on. The first thing is, how is your data? How fragmented or how well groomed is the data that you have within the system? Or sometimes you also need to be looking at data from outside your own enterprise. How can I bring that data together in a way that is actually going to be helpful with regard to my AI initiatives? The second aspect is, many a times, as you mentioned, there are legacy systems that part of the bank, or in some cases, even more than part, like almost half the bank runs on. So, how do I actually have an ability to integrate this complex legacy systems when it comes to either the input being sought from those systems or the output going into those systems for some sort of a what do you call outcome to be generated? And the next one is in terms of the technology itself, because the technology is rapidly evolving. So many a times banks took wait and watch approach in the past till the technology matured. It was the game of some other industry, and once it matured, banking adapted it. I don't think that kind of a convenience exists today for you to wait for AI to mature to a larger degree and then subsequently adapt. So technology is changing so rapidly, so banks are finding it a little hesitant to commit to one particular platform. So they need to be open to multiple platforms. So it means competency across multiple platforms. So technology in itself sometimes could be causing this kind of a delay. So they're experimenting one technology, then going to another technology. So it takes a lot of time for you to get confidence that this is the right stack that I can work upon. And the final one, especially when you said that there are a lot of people who do use cases, but half of them or more than half of them don't go into production. Even if they go into production, they go into production in one small function within the bank, while it has sufficient, what do you call, applicability across multiple functions. So that scalability is also impaired because many people, out of enthusiasm, build AI, agentic AI system, implement it in a particular function, and soon after come to realize that compliance function of the bank is actually coming and sitting on their head saying that how is it that you're actually monitoring this system? So from that angle, if I need to really highlight clear outcomes not being defined, data not being fully pruned and kept ready for AI usage, then the what do you call the choices that they need to make in an evolving scenario of the technology, and finally having not given enough thinking or enough preparation with regard to monitoring the AI initiatives post production, that is after they have actually deployed in production, or the kind of things that have been coming in way of AI really taking center stage within the banking organizations. Yeah.
That's a really insightful perspective, Ranga.
Mm,
And
mm,
I think in many cases, the
mm,
technology itself isn't the biggest challenge anymore.
mhm.
The real complexity lies in integrating AI with
Yeah.
probably your existing or legacy infrastructure,
Yeah.
while also ensuring data quality or navigating regulatory requirements, building
True.
that trust among employees and customers, and
Mm,
creating that culture which is ready to embrace AI-driven decision making.
yeah.
And it requires much more than just deploying new tools. It demands alignment across business, technology, risk
Mm,
factors,
mm.
leadership teams.
Yeah.
So, there's a lot of aspects that we need to consider when deploying AI. But I guess what enterprises usually do is, they feel that, oh, okay, we just have to get an AI software or system and just deploy it. But then when they don't get the desired results, so that's when, they have to take a step back again and start the
Yeah.
procedure, but this time with a more wiser approach.
Yeah.
Yeah,
And many banks have started doing that. So to say, we need to give them their due credit. See, that stage of experimentation with the evolving technology was something that we saw happen in year 2025 and part of 26. But I would say like 24 and part of 25. And post that, smart banks, especially some of the regional leaders, as well as few global leaders, that is top 10 banks, global top 10, have really come up the curve, and they are having that ability to say for a given business function like lending or like payments, they're having a what we call as AI at scale blueprint. They're starting with something like first thing is business revisioning. When they say business revisioning, it is saying that if I have to hold leadership that I'm already having, or if I have to gain leadership that I wish to have, then what are the top 3 or 4 parameters that I need to change? And if I need to change those parameters, then what is it that how do I reimagine my technology? How do I imagine my processes? And as part of that, how do I reimagine the roles of the people that perform various tasks on the process? And then they're coming down to actually looking at a technology blueprint. So it is starting with business revisioning, then technology process and people are that those things are being reimagined. Based on that, they are coming down to actually create a blueprint, not only using AI as a means, but multiple technologies in which AI, ML, and automation are central. And if this is a kind of a plan, then they're going into the drawing board in terms of how do I put governance on one side, how do I prepare data on the other side, how do I engineer integration with legacy on the other side. So it's not like a use case. It's a what do you call it's a comprehensive program comprising of multiple streams, multiple projects, culminating into the kind of desired outcomes at the business level. And I'm seeing them really get smart at it. And you will see more and more as you go into the year 2027, 28, you'll actually see a lot more positive, what do you call, case studies or positive outcomes that you will see come to realize.
I agree with you, Ranga, and I think that naturally brings us to the next part of the conversation where I want to talk about governance and regulatory requirements.
Mhm.
Considering we're talking about the banking industry, so I think our conversation would be incomplete if we don't highlight and talk about these particular aspects.
Mm,
Of course, we discussed all the opportunities the banking industry can leverage
mm,
with the deployment of AI. However, the increasing adoption of AI in the banking industry also
Mhm.
raises concerns for comprehensive AI governance.
Mhm.
Now, even though this technology promises various benefits for banks as well as clients, utilizing it efficiently and securely is very important.
Yeah.
And even governments across the globe are implementing strict AI governance practices in the banking sector
Mhm.
to ensure that everybody is using this technology securely.
Yeah.
So, what governance, security, and compliance consideration become critical as banks scale up their AI adoption?
Good. See, unlike when the digital maturity happened and digital first was being talked about, or when the data focus came in and everybody started investing in data, see, at that point of time, be it with digital or data, the central banks did not quickly respond and establish standards. But when it comes to AI, we need to give credit to most of the central banks across the globe, including our own RBI. They've been very, very quick in actually coming out and putting out a kind of a, what do you call, governance policy or directive, so that there is clarity with regard to what is it that they need to really be looking at if they need to adapt AI at scale, especially considering banking as a regulated industry. So that credit is to be given to the central bank. So to that extent, there is a framework for governance, not something that each bank is evolving. In outside of that, looking at comprehensively on about the industry, there is a prescribed regulatory framework, so to say, is prescribed. So that is a big advantage. Apart from that, as I said, the banks which have come through the learning cycle and are actually looking at creating business impact on their own, on one side, they've looked at the prescribed framework, and more importantly, internally based on their own insights and understanding, they have also developed a governance framework. So if you look at it, three things that really take center stage with regard to that governance is the data governance, AI model governance, and the decision support, governing the decision support. So data governance establishes what information AI initiatives can access, so that there isn't, AI accessing data the way it wants. Rather, there is actually reasonable control with regard to data that is being accessed. And similarly, when it comes to model governance, it actually look at the kind of models that are used by AI. Do they have any kind of a performance bias? Do they have sufficient degree of explainability? Do they have sufficient degree of monitoring? Similarly, if there is any degree of validation required, we may buy and adapt a model, but you need to validate. So to that extent, model governance details are something that are very clearly available, and some of the banks have already been using. And the other part that they've been looking at is in terms of decision governance. In terms of, even if AI is there to support a particular person, so to an extent, who's actually accountable finally for the decisions rather than leaving it to some autonomous agent or a bunch of agents. So there is a model governance procedures and policies are there. So in all, when you put them all together, even at the development side, when you're actually developing a kind of a AI solution, which could probably be looking at some degree of agents, some degree of ChatGPT, some degree of ML, how is it that all these things are designed in a way, designed with safety as a measure from the very beginning, that is even in the pre-production area, there is some degree of maturity already there. So to that extent, it's a question of adapting it, and adaptation could make your implementation a little bit slow. It's always good that you start with governance as the first step rather than governance as an afterthought. So to that extent, it's better to actually let that AI initiative go a bit slow while you build governance at every step, rather than thinking of looking at governance post-development, pre-deployment. So that is something that people have realized, because as you said, many a times the use cases never went into production, largely because they were either very tactical and it did not really make a big sense to put them in production, or in most cases it's because of concerns associated with compliance and governance. So
Right.
so governance is a what you call is a far more important investment to make,
Mm-hmm.
and it is to be made along with engineering rather than post-development and pre-deployment.
Right.
And governance takes center stage even after deployment because on a
Mm.
ongoing basis, you need to be monitoring your entire AI projects
Right.
in production.
Right. Right. No, I agree with you, Ranga, that governance is no longer governance or security and compliance.
It's not a one-time activity.
Yeah, all of these are not, a
Yeah.
post. You cannot treat them as an afterthought in terms
Yeah.
of deploying AI. You really need to integrate all of these right from your designing, even after the use cases are deployed, so that you can continuously monitor. And this becomes the foundation for building trust in AI. And financial institutions are dealing with highly sensitive customer data.
Yeah.
So cyber threats are also increasing, the regulations are evolving. So this helps, maintain the right balance between innovation and accountability for banking leaders today.
Yeah.
Great. So that brings us to the end of our conversation, Ranga, and thank you so much for your insights today
Yeah. Yeah.
and giving us an overview that going AI first
Mm.
means a transformation and
Yeah.
not just in technology, but also in the ethics, organizational culture, human resource strategy.
Mm.
And this then sets the stage for a more inclusive and a forward-looking banking future. And
Yeah.
a live AI first enterprise that continuously evolves and learns as new knowledge comes to light.
In fact, if banks need to really master and get the best out of the evolving technology,
Mm-hmm.
unlike in the past, like you go and invest more and more in one stream, like a technical stream. In this context, we strongly feel that the end using banks need to be focused on five strong competency units. One competency unit is a business re-engineering unit, which actually says, I'm doing business in a particular way and I'm having certain performance parameters, but I desire a different performance parameters of ABC in detail. If this is the particular business parameter that I need to arrive at, how is it that I need to be reimagining my process, people, and technology? That's one competency. The second competency that you require is if this is the way that people process and technology is to be there, how is it that I can evolve and adapt various technologies and put together a solution? That is your engineering competency.
Right, right,
While that is the second competency, the third competency is if this is the kind of engineering that I am committing to, then what kind of preparedness do I need to have with regard to structured, unstructured, internal, and external data that I can bring together ahead of time so that as the engineering matures, they are in a position to access this data in a reasonably secure manner and utilize it.
right,
And the other unit that you need to have is your governance unit. If you build these four competencies at the minimum, there could be a fifth competency of R&D to look at the market and say what is evolving, which is evolved enough for adoption and things like that is something you can still outsource to a consulting firm or a big tech. But these are the four units you need to build from the scratch. If you
right,
just try to give this to somebody who's been by title holding that role versus by virtue of conviction and passion holding that role, it makes a lot of difference. So
right,
you will come across even when banks reorganizing themselves so that these four competencies really take root and grow.
right, right. Thank you
We are
for your insights,
definitely
Ranga.
we are definitely going to be having very exciting times over the next 24 to 36 months.
Totally, totally, I agree with you.
Yeah.
Thank you for your insights. It was lovely chatting with you, Ranga.
Yeah. Thank you very much.
Thank you. This is for our listeners. I hope you enjoyed today's discussion around AI first banking and gained some interesting insights from Ranga. And hopefully, you could implement them in your respective organizations. Stay tuned for upcoming episodes, and you can view all our previous episodes on Spotify and other leading platforms. Thank you so much.